We have reached the scheduled time and we have formed a quorum. Let's call the meeting to order. All right. Confirmation of minutes and matters arising. Meeting held on the 2nd of February 2015 have been circulated to members. The Secretariat has not received any proposals for amendments. If members do not have any proposals for amendments to make, then shall we confirm the minutes? All right, thank you. Second item, papers issued since the last meeting. After the regular meeting held on the 13th of April, the panel received 2 information papers and the details are set out in the agenda. Third, date of next meeting and items for discussion. Date of next meeting is 1st of June, Monday, and the administration has proposed 3 items. First, briefing by the Financial Secretary on Hong Kong's latest overall economic situation. Second, proposal to attract enterprises to establish corporate treasury centers in Hong Kong. And third, pilot program to enhance talent training for the insurance sector and asset and wealth management sector. Any comments? If not, then thank you. As we have many items today, that's why we have to advance our meeting to 9:30. That's the same as today, so that's to facilitate a discussion. Next, our discussion item, a briefing by the Hong Kong Monetary Authority. Let's invite them to join us. Welcome to Mr. Norman Chan, Chief Executive of the Hong Kong MA and his team. So we've been told that they'll do a PowerPoint presentation and paper number CB-1 780-02. Mr. Norman Chan, please finish within 20 minutes. Good morning, Chairman and members. Concerning our work, I'd like to give you a briefing. First, on assessment of risk to Hong Kong's financial stability. The most important development affecting the global economy is the interest rate regularization and the timing as well as the pace of it. And last time, after we came in late February, the Federal Reserve held 2 meetings in March. What I'd like to say is that with regard to U.S. interest rate, were from a very low level, close to 0, and also the very irregular situation with QE, well, the timing of that is looming. As you can see, in March, after the FOMC meeting, the majority of members believed it would be appropriate to hike rates this year. But then in March, they said that they would not be doing that in April. And indeed, in April, after the meeting, there was no change to the rate. But then the prospect is that during the first quarter, because of the poor weather, it was still quite weak. But then they believe that the growth has been pretty reasonable. And also, the currency policy is that even if there is an interest rate hike, they would not be predetermining the course of tightening. The pace would depend on economic conditions. So they would not be presetting the rate of increase every time. So they would be looking at the economic condition in determining the pace and rate of increase. But then the current economic situation in the U.S. is not bad. Well, as I said, in the first quarter, well, GDP was affected by inclement weather. But then for inflation, because of the significant drop in oil prices, inflation has also slowed down. But then in the future, we believe that there is a chance that the momentum for economic growth and inflation might grow, because we can see that the labor market has been improving and unemployment rate has come down to some 5.5%. And given the low unemployment rate, then there would be pressure for wage rises, and that would also boost inflation and economic growth. And as I said, with the fall in oil prices, and in recent weeks, we can see that oil prices have stabilized, and that would also put pressure on the economy so that inflation might rise again. And then with the escalation or appreciation in the US dollar, that would also have some pressure. But then in recent weeks, it has also stabilized. That's why the pressure on inflation would also ease. And there are only two lines here. The first one is the red line, and we use the futures for the Federal Reserve's future as an indicator. So the red line is the market expectation, and the blue line is Fed's forecast. And then, so that's the median for the Fed's forecast, and that's the March forecast. And in April, they did not make any announcement. But then you can see that there is a gap between the two. In other words, the market expects that by the end of this year, in terms of the interest rate, that would be slightly over 0.3%. But then for the Fed's forecast, is 0.63. So there is a 30 basic points difference. So that would only widen. So by the end of 2016, the market expects that by the end of 2016, it would stand at about 1%. But then if you look at the Fed's forecast, it's 1.9%. And then by 2017, the gap would be even wider. So it's 1.57 and then 3.13 as expected by the Fed. And of course, there is no way to tell which side's forecast would be more accurate. But then as you can see, the market's expectation when compared to the Fed's own forecast, well, in terms of the pace of increase, it would be somewhat more moderate. But then as to when that will start, whether it's going to be in June or September or even later, there is still a lot of uncertainty. But then we have to know that with that gap in mind, so if the Fed indeed increases rate, and if it's close to the forecast by the Fed, then the market's response might be more radical. This chart shows that, well, the Fed is now talking about withdrawing from the market so that interest rate would become more regularized. And they also expect that, GDP would come down. But then for Japan and Europe, they're actually introducing a new version of QE. And in this regard, so the balance sheet is going up. So from what does this mean? In fact, for the three major economies with the difference in their currency policies, the gap is widening. So this shows the volatility in the forex market, and the more it fluctuates, it shows that the market is more volatile. But starting from the middle of last year, if you look at the major currencies and if you look at the portfolio, in fact, they are rising very rapidly. In other words, the exchange rate has increased in volatility. And this chart, I'd like to elaborate a bit more. Well, as Euro introduced its own QE, so during this period of time, from 2010, middle of the year to now, and if you look at the German bonds yield is the green line. It comes down very low, and then for the red line, it's zero interest rate. And as you can see, in Germany, the German bond for those below 5 years is already in the negative region. In other words, if you buy German bonds, if you buy short-term German bonds, then you will have to pay interest rate or pay interest to the German government before you can buy it. So in Switzerland and Sweden and Denmark, they also have similar situations. In other words, the interest rate would be such that the borrower will be getting interest rate. So for the one taking out the loans, they don't have to pay interest rate at all. So that would distort the market. There are three aspects to this. Number one, for those relying on interest rate return, they would be penalized. In particular, for those who do not want to take risks, i.e. those retirees and also the pension funds and also insurance companies, because in Europe, some insurance companies have got some time deposit products, and if interest rates come down such significantly, then they would also be adversely affected. Another distortion is that, as the negative interest rate would be totally unattractive, that's why funds will flow into the stock market and also high-risk investment. And as a result, in a particular asset market, it might be overheated, and there might also be a mismatch of assets in with investments. And also, a consequence is that funds would also be flowing out from the Eurozone to other areas, including the US zone, in order to get greater return. And that would also cause volatility in the currency market as well as the outflow of funds. And also in an emerging market with a low interest rate, well, in terms of the interest rate, the enterprise bond market has been very robust. And in 2014, well, the total enterprise bonds have amounted to over 1,000 billion US dollars, and that's very sizable. And also, if you look at the emerging markets share, well, in 2008 is about 80% or so. So in terms of enterprise bonds, with this robustness, emerging markets are taking up a higher and higher share. What are the problems then? Well, I'd like to just say a few words about the potential risks. Number one, for supervisory problems and so on, well, many multinationals, well, in terms of the bond holdings, they have reduced their bond holdings. Those are global banks. And also in terms of market-making activities, they've also reduced that. And that would also have a negative impact on the market. Secondly, there is an increasing foreign participation in bond market of emerging market economies, including Malaysia and also in Indonesia. Some 30% of the bonds are held by foreign investors. And also for ETFs, exchange-traded funds, well, the size would be growing, and that would also be very attractive to the investors. But then they are mainly led by retail investors, and when the market is robust and when the interest rate is low, then many people would be buying these ETFs. But then when there is any blow to the market, then retail investors would be retiring or withdrawing from the market, and the pace would be very rapid, and that would also increase the risk. And fourthly, as we can see, there are some super large corporates, and they're managing assets to the tune of some 10,000 or 1,000 billion US dollars. And for corporate bonds that they take out, well, they would be held by just a handful of companies, and therefore there might be overconcentration of holdings of such corporate bonds. And also many corporations would also be subject to a lot of pressure. That's why for the corporate bonds in the emerging markets, some over 20% would be in energy or energy-related industries. That's why when they release bonds, they would also be subject to some pressure financially. This chart shows the interest rate and also the movement of funds.
Emerging markets are still under downward pressure because every time US dollar appreciates, there is capital outflow. On the left-hand side is Russia. It's a depreciation of over 40% and has stabilized recently. And for Brazil and Turkey, from the middle of last year to this year, then there has been a depreciation. Also recently, there's been a depreciation, 20% to 25%. For emerging markets in Asia, on the right-hand side, they are having depreciation and also seeing capital outflow. Let me try to wrap up here. We can see that in US, Europe, and Japan, there are divergences in monetary policies. So that leads to high volatility in forex markets. In the Europe, ECB, there has been quantitative easing and has resulted in negative yields of some sovereign bonds, leading to market distortions and dragging down other bond yields. I've also said that in the bond market there has been structural change. So in the future, the volatility and potential risk will increase. Now, for emerging markets under the strong US dollar, there are downside risks because of appreciation of US dollars, and especially those countries with weaker fundamentals and relying on export of energy, they are affected more. And also, the biggest factor in influencing the global financial market is the interest rate normalization of the US and also the pace of such normalization, and it will affect the fund flows, interest rates, exchange rates, and asset prices. Now, turning to mainland China, we see that in the first quarter, GDP 7% in growth, lower than 7.3% last year. The state's anticipation is around 7% for the whole of this year. It's been slowed down somewhat. And the World Bank's anticipation of forecast is 7.1% this year, 7% next year, and IMF lower, 6.8% this year, 6.3% next year. So you can see from these graphs that the growth momentum has moderated somewhat, and that's because the capital formation or expenditure is a little bit slowing down. This shows the investment in real estate and manufacturing industry. It's the growth momentum has moderated. The blue line at the top is infrastructure investment, while it's still going at a very good pace. And the central authorities are investing more in infrastructure projects. On the right-hand side is bank loans on the development and changes in bank loans. The three columns at the right-hand side, after a sudden drop, the bank loans and financing has stabilized. The mainland economy is entering a state of new normal, and they're not blindly seeking after high growth rate. They are rather looking for a steady growth, and the target this year is around 7%. Some people are worried about whether China will be having a risk of hard landing. Our assessment this time is that risk is not high for three reasons. The economy is moving a little bit slower, and the investment in manufacturing and real estate is slowing down. But then for the monitoring policy, there is still sufficient policy space to make adjustments. They have adjusted the 2 times the interest rates and also the reserve fund or reserve requirement. Now, stimulating through fiscal policy, the local and central governments can expand infrastructure investment, including railway and water conservancy projects, totaling renminbi 1.6 trillion. This is quite a substantial amount. Lastly, pushing ahead financial reforms, including interest rate liberalization and introduction of safe deposit protection scheme and promoting financial innovation. These initiatives will be launched this year, so the credit size will not increase substantially, but the funds will be used to support the growth of real economy. Now, turning back to Hong Kong, on the 27th of February, the HKM may introduce the 7th round of prudential supervisory measures. It's been 2 months now. What we are seeing here today is in the primary market, the sales and transaction of individual property development have been brisk, but then for secondary market, there has been a marked drop in transactions. Now, with regard to prices, there has not been substantial change. I think it's still too early to draw a conclusion. We need more time to see how our measures will have an impact on the property market. Financial stability or credit growth, and then I would be deferring to Arthur. 19.3%. For this quarter, IPO has led to credit growth. Now, the actual growth rate, annualized growth rate, is 8.3%, not a very high growth rate. Chairman, I would like to turn to about fund flows into Hong Kong recently. If you look at this graph, in 2008-09, we faced the global financial crisis, and this shows the net Hong Kong dollar inflow, and we changed US dollar into Hong Kong dollar. On the right-hand side, $71.5 billion. And that is $9 billion into Hong Kong, and that has to do with the very brisk stock market recently, and that also has to do with corporates mergers and corporates having to purchase Hong Kong dollars to give out dividends, and well, that is more or less the same as a $75.3 billion last year. Well, whether there will be further inflow of capital into Hong Kong, which depends on the overall development of the finance market in Hong Kong. Overall, since 2008-09, inflow of funds into Hong Kong it is in excess of $100 billion, and that is around 90 Hong Kong dollars. And this is very unusual against the background of low interest rates and QE. We expect that when U.S. Interest rate normalizes, when the U.S. dollar interest rate is higher than Hong Kong dollar, then such Hong Kong funds will flow out of Hong Kong gradually. As said, recently Hong Kong's stock market is very brisk recently, and that has to do with the launch of the Shanghai Hong Kong Stock Connect. Later on, the Shenzhen Hong Kong Stock Connect will also be rolled out. So there will be interconnectivity of equity markets between Hong Kong and Shanghai. And a consequence is that there will be interactions and mutual influence between the two markets. And that is to say, the investors in the two places will have impact on each other. So we have to adapt to and know about these new features. There will be more capital inflow and outflow between Hong Kong and the mainland. And so Hong Kong stock market will be subject to more fluctuations. So investors have to manage their risks more carefully. Now I'll defer to Arthur to talk about banking supervision. First of all, as Mr. Chen said, well, there is a slide on credit expansion, and that looks at what happens in the past few years. And this slide shows the quarterly development. The first quarter, excluding the credit growth because of IPO, the actual credit growth is 8.3% in the first quarter of 2015. Is a rather moderate level, and compared to the second half of last year, is more or less the same. This 8.3 annualized growth rate, the main source has to do with trade financing loan, and use of local loans is rather low. On the other hand, we understand from the sector whether it has to do with the changes in the risk management model. Well, they told us that there hasn't been a change in the risk management approach, and this moderate growth has to do mainly with the relatively prudent need for credit from corporates. Every time we also talk about this, and that has to do with the legislation, the Basel III implementation progress in Hong Kong. In January and March this year, we have introduced 2 amendment subsidiary legislations, and they took effect, and that has to do with capital and liquidity and disclosure. In the first quarter, we announced that from January next year, we would be implementing the counter-cyclical capital buffer, CCYB, and a few weeks ago, we have designated 5 systematically important banks, DSIBs, which have to abide by higher requirements on capital. In the future work, we have to make amendments to capital rules. We know that in the second half of this year, last year and early this year, Basel Committee has reviewed how Hong Kong implements Basel III and Basel II, and they have drawn up certain conclusions or findings, and they think that we need to further amend our capital rules to meet with the Basel requirements. So in the next few months, we will have to be introducing capital technical amendments to be vetted by the electrical. And there are also certain technical requirements that need to be implemented in relation to Basel Committee's requirements. So that will be done in the next few months. Now, also, and as said in the past few meetings, we have to introduce a cross-sector resolution regime for financial institutions in Hong Kong to meet with international standards. Last year, we conducted the first consultation exercise, and the market supported it. And early this year, we conducted a second consultation exercise, which ended on 20th of April. That was technical in nature. We have received 27 submissions, and most of them supported our proposals. There are 2 to 3 areas where there are more international developments. So in the middle of this year, we may have to conduct a third shorter consultation exercise around mid-year. And our aim is to introduce a bill into the Legislative Council by the fourth quarter of this year. We have already started the drafting work. Mr. Pang. Development of financial markets. We have introduced a bill in the Legco to seek to place a legal framework for SVF and RPS to ensure adequate protection of users' flow maintained with SVF issuers and the security and soundness of the operations of SVF and RPS in Hong Kong. The bill was introduced into the Legco on the 4th of February 2015, and 4 bill committee meetings have been held in the past several weeks. We hope that the legislation can be put in place ASAP. In terms of the Islamic bond, in September 2014, we successfully issued the first batch of US $1 billion in inaugural sukuk. It was well received, attracting orders exceeding US $4.7 billion, and the interest rate is more or less similar to the US Fed or sovereign bond interest rate. We are now preparing for the second batch of the Islamic bonds. We would be reducing the proportion of the underpinning tangible assets from 100% to 34%. So we hope we can set a precedent for issuance that have fewer assets to underpin the sukuk. Tenure will be 5 years and issuing size US $1 billion. Another major task this year is to attract or develop Hong Kong as a corporate treasury census, CTC. In the budget this year, the FS said that the government will amend the Inland Revenue Ordinance to allow interest deductions under profits tax for CTCs and reduce profits tax for specified treasury activities by 50%.
So there would be profits tax reduction by 50% in specified treasury activities, and the specific legislative proposal would be put out for consultation with the industry, and we plan to introduce the amendment bill in the 2015-16 Legco legislative session, and the HKMA will also continue to engage the industry and multinationals both locally and overseas to promote it, and they would also be encouraged to set up CTCs in Hong Kong. With regard to offshore RMB development, that's been very steady, and for the amount that has been dealt with, that has exceeded 1,600 billion RMB, and that has represented an increase by some 9%, and for RMB RTGS system, it has also seen a greater daily turnover, and the daily turnover has reached some $830 billion. And in terms of fundraising activities by RMB, that has been developing very steadily, and by the end of March, in terms of the total RMB held, that has amounted to some $1,600 billion. And when compared to the same period, well, that's the main reason is because of the depreciation of the US dollar. And well, by the end of March, for unpaid debts, that has also reached some dim sum bonds that has also reached some $3,000 billion, and also for the loans that would also amount to some $2,700 billion. That has represented a more than 10% increase when compared to last year. In fact, there are only 2 charts, and the figures are relatively simple. Before that, I'd like to say or refer to some background factors. 3, for the bond market, in terms of the yields, in recent during the past 6 months or so, it has dropped to a historical low. In taking Germany as an example, for those below 4 years, it's already in the negative region. So there are 2 aspects to the investors. So in terms of the fixed yields from bonds, the income would be next to 0. And also, given the low yields, there is very little room for further downward adjustment. But then, as a result of that, for bondholders, they would be susceptible to a lot of loss in terms of yields. And also, in terms of the taking the standard 100 or standard 500, it has already gone up by by several times, and there would also be a 20-30% increase year on year. So that's a very rare situation, and that's why if you look at the current situation, according to many analysts, the value is already overrated, and it's all. Even though it might not have reached the bubble level, but then for stocks, there is very little chance for further significant increase, and there is also a risk of downward adjustment. And also for the US dollar is on the strong side because of the currency policies discrepancy. That's why US dollar is also appreciating very rapidly. It's also historically rare. And also for some funds, they would also record an exchange loss. As you can see that up until the first quarter of 2015, for the exchange fund, the investment in the stock market in Hong Kong, that has recorded some $6 billion investment income, and in other areas that would also yield a very high increase. But then in terms of the currency investment, that has recorded a very significant loss. So for investment income, we have only managed to get some $6.6 billion income, and also for the fee paid to fiscal reserves is $11.4 billion, and then at the same time for the fee payable to the Hong Kong SAR funds and statutory bodies is $3.5 billion. So that's all for our presentation. Okay. 3 members would like to ask questions: Wong Kwok Heng, Chen Kam Lam, Albert Ho, Sin Chung Kai, and Starry Lee. Okay, Wong Kwok Heng first. 4 minutes, including both questions and answers. I raised my hand very early, says Regina Ip. Okay, after Chancellor, it will be Mrs. Regina Ip. Mr. Wong Kwok Heng first. Thank you. Thank you, Chairman. I have 2 questions for Mr. Norman Chen, the Chief Executive of the HKMA. If you look at chart 3, it's about the pace of U.S. hiking rate. Yes, Mr. Norman Chen has repeatedly sounded serious warnings that once interest rates goes up, then there would be risk to the property market. But then property prices are continuing to rise, and for the stamp duty measures introduced by the administration earlier on, they haven't yielded any result or effect. So my question for Mr. Norman Chen is, for the general public, given the high property prices and the entailing risks, what kind of advice would you give to them? So apparently we have seen this effect that despite all the cooling measures, property prices are continuing to rise, and there is no end to this rise. So what kind of advice will the Chief Executive of the HKMA give to the public? And in your presentation, you haven't really talked about the AIIB, how Hong Kong is going to be involved so that Hong Kong will be able to fully develop its potential in the establishment of the AIIB. let me answer the second question first. For the AIIB, the SAR government has indicated that we are interested and we'd like to join. But then, as this is a development bank, so basically it's for the FS and and also the FSTB to take the lead, and then we would just be playing a supporting role. But then we would also like to see that as soon as the AIIB starts to operate, so for part of the asset management or fund management, they can make use of Hong Kong's financial platform to do it. Well, to us, it's a good thing. And then for the AIIB, it would also be good. Well, Mr. Wong Kwok Heng, on your first question on the property prices, well, we have already introduced counter-cyclical measures. That's because of the developments in the property market, and we have rolled out that. And the seventh round has yet to be rolled out. In other words, we believe that the property market is still on the rising trend, and there are complicated reasons resulting in this, and property prices would be subjected to a number of would be subjected to a number of factors, supply and demand, and also the mortgage payment cost, and also the growth in population, and also families needing accommodation, and so on and so forth. But then I believe that one point is very important, is interest rate payment. And in Hong Kong, in particular for mortgage interest, is only about 2%, so it's a historical low. But then, as you can see, from 2.5%, all right, making mortgage installment payments is not very much a burden. And Mr. Wong asked me if I have any advice to make. In fact, for the 2.5% interest rate, is abnormally low, and that would not last forever. In particular, you're talking about a cycle of 25 to 30 years. So when U.S. interest rates normalizes, Hong Kong's interest rate would also normalizes. So if there is an increase by some 300 base points, then would that still be affordable to you? That's what you have to think about, because for accommodate or for housing need, it's only for the individual families to think about what their need is. So you will have to pay attention to the possible rise in interest rate, and you will have to look at your own ability in determining the kind of housing that you can live in. Mr. Chen Kam Lam, thank you. As we have heard from the Chief Executive of the HKMA, you talk about the U.S. interest rates trend that would also have an impact on our economy as well as our property prices. I share his view. But then the thing is, interest rates in Hong Kong, because of the currency, because of the dollar peg, is almost pegged too. So we will follow closely their interest rate. So Mr. Chen, what methods or measures can be introduced so that we can deviate from them a little bit, so as to help adjust Hong Kong's economy? And just now, I've also noticed that Mr. Chen, you also talk about an influx of funds amounting to some 900 billion US dollars. What that might have to do with the situation in the US and Europe. That is because of the negative yields, because people are trying to put their funds in areas where there would be positive interest rate yields. So Hong Kong, when compared to Europe, we are still faring better, because in Europe, nobody is willing to deposit money, nor do people want to take out loans. So I don't think that will stay forever, because if that sustains, then as far as the economies in question are concerned, well, in Europe, they would also be dealt a very severe blow. And we also have to note that in the event that there is a reverse in their interest rate, then some 900 billion US dollars would be flowing out all of a sudden. And if that should happen, then to our financial situation, that would also have a significant impact. So is there any way for us to ensure that for the speed of the outflow, that could be moderated, and also Hong Kong's funds and liquidity would not be susceptible to such blows externally? Thank you, Mr. Chen, for your questions. Well, let me clarify. In terms of the influx of funds, it's 110 US dollars. So it's almost the same as, so it's equivalent to 900 billion Hong Kong dollars. Well, the message is clear. So when the money has come in, where has they gone to? Well, in fact, they've all gone to the exchange fund. But then in terms of our management, we have to deal with that separately for the 110 billion US dollars. Well, we can only take out a very short-term federal bonds, and it yields almost nothing. Why do we have to put it into such a safe deposit account? That's because there is no way for us to tell as to when people will be going out with their money again. Well, when there is this outflow, well, the environment would be like this. And one obvious situation is that when U.S. interest rates starts to rise, then there is an adaptation process for us. Well, in the past few years, for money that has come in fact, they would gradually go out again. Well, Mr. Chen, I'm not worried that overnight the 100 billion US dollars will be out suddenly. But then if US starts to increase interest rate, then Hong Kong's interest rate would be somewhat lower, and therefore for money that has been placed in Hong Kong's financial or banking system, they would go out in order to get a higher yield. But then they have a very strong confidence in the US dollar peg. That's why if there is a higher interest rate in the U.S., then they will exchange it into U.S. dollar in order to get the U.S. interest rate. I think in a design of our currency peg, when there is more money into the system, then the pool will become bigger. But then by the time when it goes out again, then in terms of the impact on the interest rate in Hong Kong, that would be somewhat slower, so that it would be a gradual process. I'm not sure if I've answered the question raised by Mr. Chen. Well, your time is up. Next, Mr. Kenneth Leung. I have 2 or 3 technical questions. First, on the interest rate gap. All right, well, there is an interest rate gap between the U.S. And Hong Kong. I think it's just a time lag, right? Because when the U.S. increases interest rate, you said that, well, funds will flow out. But then given the currency peg in the long run or in the medium run, the adjustment will be simultaneous. But then as to the adjustment period, how long would it be, Mr. Chen? Well, Mr. Leung, you're right. That is the U.S. will first increase rate. So U.S. interest rate will be somewhat higher than that in Hong Kong, and therefore the weak side convertibility undertaking will be that they will go out. But then it depends on how they are going to flow out. As I said, there would be some uncertainty because as the Federal Reserve has 2 lines, so by the time when it increases rate,
well, the path or the pace, well, it's quite uncertain. So the greater the gap in the interest rates, the faster the capital will flow out. But then if the difference is a little bit smaller, then the pace is slower. So Hong Kong investors would like perhaps to have US dollars instead of Hong Kong dollars. So the outflow of the capital will be faster. I can't say for sure it's going to be 1 year or 1.5 years or what. But sooner or later, the interest rate gap between the 2 places will narrow down. Exchange funds investment, slide 31 and 32. You see that the foreign exchange rate and the interest rates develops at a certain pattern. With regard to the US dollar and non-US dollar portfolio and bonds or non-bond portfolio, will you be making frequent adjustments? I don't think this is your long-term investment strategy. You would like to have a stable return. You would not be acting, say, in anticipation that there will be fluctuations in the interest rates a few months down the line, because you will not do that. Is my understanding correct? Yes. You are right. We have a diversified investment portfolio. Apart from US dollar, Hong Kong dollars, we do hold other currencies like the euro, Japanese yen, pounds, and also renminbi. So the interest rates is more develops on a cyclical basis. So if U.S. dollars is weak, then certain portfolios of ours will increase in value. But now U.S. dollar is strong and the other currencies have depreciation, so we are suffering from a loss. But in the medium to long term, we said that there may be ups and downs in the market, and overall we would be able to strike a balance. If we don't use this approach, we may also be investing in a diversified portfolio, and we would try to grasp the market more closely. Say if the U.S. dollar rises, then we would be holding more U.S. dollars. And if we do that, then we'll be including a more speculative element in our investment, because you can't really predict the trend of the interest rate, right? For the latter half of last year, all of us didn't anticipate that the U.S. dollar would rise so sharply. So if we buy or hold less U.S. dollar, then that would be a problem. Now, for the first quarter of this year, the U.S. dollar has gone down a little bit against the Japanese yen, and then, well, if there are different fluctuations here, then we would be we have a problem if we use the approach of buying in and out all the time. Mr. Chen talked about the different sources of capital inflow. Have you noticed that local business conglomerates or business groups are having their capital transferred out of Hong Kong? Because there have been news reports that some local business groups are trying to relocate their headquarters and they're building, say, hotels in the Middle East. Have you noticed that? And also, if in June and July the constitutional reform package isn't endorsed, Mr. Chen, what's your view on the impact on the stock market and the foreign exchange rate? Everybody thinks that Hong Kong will be ungovernable if that happens. So have you made all sorts of preparations if that happens? Thank you, Mrs. Yip, for your questions. With regard to issuing of Forex, we give updated information on the flow of capital. There have been an inflow of $70 billion recently. So every day there is inflow and outflow of capital. It's difficult for us to fully grasp who or which group has having the capital transferred out of Hong Kong. Overall, we have more inflow than outflow. So we are seeing $9.2 billion flowing in from into Hong Kong. So we are optimistic about the market in Hong Kong. Now, Mrs. Yip talked about the constitutional reform in June, July. Well, this is not under our policy portfolio. Our duty is to ensure that our financial system is stable. We would be doing work on banking supervision to ensure that they are doing a proper job in risk management, have sufficient liquidity, and so on. And also, we have to make sure that the exchange funds can cope with any volatility. We can't guarantee that there will not be any mishaps in Hong Kong, but we would be making preparations. We hope that anything that will do a blow to Hong Kong system, financial system, will not happen. Well, but if that happens, our duty is to ensure that with regard to the resources, we have to ensure that the financial system can operate smoothly. Mr. Sin Chung Kai. Thank you, Chairman. Mr. Chen. For 5 quarters, for the exchange funds, you're suffering a loss. 85.9 billion Hong Kong dollars. I am not that well versed in investment, and I can't say, well, you shouldn't be investing too much in Forex. Well, several years back, this electrical members, when euro dollars were rising, they were advising the HKMA to buy more euros. Now, if you had heeded our advice, then you would be suffering a lot more today. I dare not teach you how to invest. But having said that, when I look at the statements here, our assets are growing, but then our income is declining. If you look at 33, and I'm afraid that the fee payable to HKSAR is dropping or shrinking from 2013 268 to 2014 275. So is this has the figures been audited? I know that it is on a rolling basis, on a 5-year or 6-year period, and that can help lessen the blow dealt to the SARG. Well, there is a direct relationship between risk and yield. Of course, we don't want great fluctuations in our investment return. But is there any way that we can invest into something that is not so risky, but at the same time we can provide a stable a fee to the SARG government in a stable way? Well, 2014, 3.6%, and 2015, 5.5%. How come that the figure for 2015 is higher? Now, let me try to explain. We are using the average figure for 6 years on a rolling basis. And well, we would be paying in a 6-year, the average of the previous 5 years. And in 2001, we got a relatively lower income. Well, you were suffering a loss that year. So we ended up with 5.5% because of the loss suffered in that year. This is an approach agreed upon with the Treasury. Average over a 6-year period on a rolling basis, as long as the reserve is put in the fund in a stable way, then we can average out the risk. The difference is that, well, we may be paying a higher interest in 1 year and lower in another year, but or on the average, if we average out, it will be stable, a level. You're talking about $50 billion, right? Well, we have agreed on the 5.5%, and we got a very good figure, multiplying by 4 times. Let me have 15 seconds to talk about this. In the past, when the US dollar was weak, we've been earning a profit in Forex. In 2003, we've been able to earn $50 billion US dollars, and 0607, $30 billion. And the scale of the exchange fund was relatively lower at that time, but then the yield was quite high. Let me emphasize that we have a diversified portfolio in the exchange fund, and we would not be making adjustment to the effect that we would cut down substantially on the US dollar, because we will be experiencing a high risk if we do that. Mr. Albert Ho. There is a substantial amount of capital flowing in and out of Hong Kong. I think this is very normal in Hong Kong. In the past, we may have money laundering activities, funds coming in related to money laundering activities. How How is the situation like in Hong Kong? I've also earlier talked to Mr. Chan and his colleague that in the banking sector, we've been receiving notice from the intelligence unit asking them to freeze the accounts of certain individuals. Now, under the law, the banks, when upon receipt of such notice, cannot disclose that information, even if the customer comes to try to withdraw the money. So the banks have to face the risk of being prosecuted or taken to court by the customers. I have passed a case to Mr. Yun earlier. The bank was quite should not be held responsible, and it is facing the risk of claims by customers. My firm has been dealing with this case. Now, for, say, a year, how many notices have been received by banks for freezing of the accounts? How many cases involve disputes? And how many customers of banks have suffered losses as a result? All these have to do with the stability of the banking system. How can we improve on the situation? And the banks cannot say anything, and they are taken to court, and the money cannot be, the transaction on the money cannot be done. So, there are a series of consequences. So, Mr. Chan, can you respond to that? Arthur, can you take that question? Thank you, Mr. Ho, for your question. Mr. Ho passed a case to us, and the information was very useful every year. Or rather, I don't have the specific figures with me on hand. Every now and then, banks would receive notices from regulatory bodies to take certain actions on certain accounts, including freezing the accounts. Now, generally speaking, when they receive such notices, the relevant enforcement bodies will apply for a court order to freeze the assets of an account. And in individual cases, we see the time lag, i.e. between the receipt of notice by the bank and the court order issuing, then it's quite long. In that process, is there any room for improvement? And the banks are an intermediary, as Mr. Ho rightly pointed out. What can they do? Because they are not allowed by the law to disclose anything, and they face certain risks if accounts are frozen. And there have been cases where the customers are challenging in the court the relevant arrangements. So there are indeed risks to be borne by the banks. So right now we are talking to banks and the law enforcement bodies to see how we can rationalize the process and improve the process.
There are some cases being heard in court. For the specific details, I'm not in a position to comment yet. But then, in fact, we have been liaising very closely with the relevant parties to see how the system can be improved. And in fact, when such cases come, the clients would also be unduly inconvenienced. We also understand the impact. Thank you. Yes, Ms. Starili. All right. The TV is now re-showing the TV drama Greed of Men. So I think it's also the greedy stage in the stock market. In fact, during the last couple of weeks, starting from early April, in terms of the daily turnover of the stock exchange, it has already reached a record high. And the Chief Executive Officer of the Hong Kong X, Mr. Li Xiaojia, said that it's a historical convergence for the mainland funds and Hong Kong market to converge, and that would bring about numerous opportunities and challenges, and therefore Hong Kong should try to learn about this more actively, so that we will have to adapt to the new phenomenon, because this has become the norm. So my question for Mr. Norman Chen is that given the fact that we have entered this new era in our stock market, so in terms of Hong Kong's financial stability, what does that have to do with our financial stability? So that can you tell us how you think? And earlier on, there were also reports. Well, for the People's Bank of China, well, the head, Mr. Zhou Xiaozun, said that in terms of bank supervision, we have to test out the new personal investment QV2 plan. So I understand that in the past, your colleagues have been liaising with the state authorities about Hong Kong and even the state's financial reform. So can you share with us what is it all about? And also with regard to Shenzhen Hong Kong Stock Connect and also even Taiwan Hong Kong Stock Connect, are there any such developments? Can you share that with us? I would not be calling this as the greed of man's era, because in the capital market and the stock market, the main regulator is the SFC. But then from banking stability, we can look at it from several perspectives. First of all, for the funds, for example, whether it's the Shanghai Hong Kong Stock Connect or the Shenzhen Hong Kong Stock Connect, as a result of that, there would be flows of funds, including Hong Kong RMB's exchange, Hong Kong converting into RMB or RMB into Hong Kong dollar. And as I said, we also have to pay attention to that, because given the banking sector in Hong Kong, to what extent will we be able to cope with such a sudden increase in turnover or transactions? And secondly, we are also very concerned about the payment system and the settlement system. Is it sound enough? Well, for the payment system, well, for stock transaction, well, is run by the Hong Kong X. But then for the banking sector, for individuals or even brokerages, if there are any loans related to stock transaction, then is it sound? So the main purpose is that the market is for people to trade so that they can also identify new prices. And if there are very great volatility in the market, then the system will still have to be able to support it so that it can still run smoothly. So that's the very core issue. And second point, according to our understanding, is that mainland is now considering whether or not it can further relax personal or individual investment, so that for qualified individuals, they can export the funds so that they can be used for investment. And there are still many details to be worked out. But then from the HKMA's perspective, what we should do is to seize the opportunity so that when such a relaxation is rolled out, then for a sizable number of individuals, they might be considering using Hong Kong as a platform to invest their funds. And as I said, it would not just be confined to Hong Kong stocks, because they can already make use of the Shenzhen or Shanghai Hong Kong Stock Connect to buy Hong Kong shares. But then once there is relaxation on individual investment, they will first come to Hong Kong to make use of Hong Kong's premium investment platform so that they can make investments in appropriate areas. Next. Mr. Ng Leong Sing. Thank you, Chairman. Well, just now I was attending another meeting. That's why I'm not sure if my questions have been asked already. First of all, I'd like to thank Mr. Norman Chen and his team for coming to brief us. I've read the old slide, not the new one, and I've looked at the earlier slide, page 73 and 74. I can see that RMB's payment system, the average turnover and the change is rising every day, and it's a good trend. But then if you look at what some other members have been concerned about, and that's about the Shanghai Hong Kong Stock Connect, and because of the increase in turnover, well, operationally, because it's a record high turnover, and if it went up so rapidly, then there might be difficulties adapting to it. So how can we make good things even better? In particular for the AIIB, if there is a chance for it to be converged with the Hong Kong market, I think the chance is very high. So I'd like to know, well, for the RMB's real payment system, given the increase in turnover, are we able to cope? Do we need to expand the capacity so that we will be able to cope with future further expansion? And also, in the earlier slide, we can see that, for the CDs, RMB CDs, and also RMB dim sum bond, in recent years, there has been a moderation. So from the HKMA's perspective, have you looked into it? Is it a short-term phenomenon, or what are the causes resulting in further changes in the future? So can you tell us these 2 points? Thank you, Mr. Ng. Well, I was referring to the financial infrastructure, and that's the prerequisite for financial stability. And Mr. Ng Sing was referring to a very important issue with regard to the payment system for RMB. All right, you're very happy with the transaction. All right, you're converting RMB into Hong Kong dollar and vice versa. But then for the settlement system, is it running smoothly? In fact, if you look at the daily turnover, it's been rising. But then when we look at it, so we don't just look at the amount. The most important thing is the number of transactions, because as far as the computer system is concerned, the most important part is the number of transactions. So please rest assured, because all along, with regard to the payment system, whether it's Hong Kong dollar or RMB, we've been attaching a lot of importance to that, and therefore we try to look at it from the IT perspective, and also stability, and also the reserve capacity, and so on. So we also have full backup of the whole system, so that even if the number of transactions and amount were to rise more rapidly, we would still be able to cope. With regard to the fund holding, and also in particular for the holding of RMB, well, the desire for that would be somewhat affected by whether RMB were to depreciate or appreciate, because when you see that RMB is appreciating, then for many individuals and corporations, they would be willing to hold some foreign currency in the form of RMB. And last year, there was a slight depreciation between RMB versus US dollar. That's why the momentum slackens a little bit. But then for RMB dim sum bond, there are many factors. Well, demand, so and also Hong Kong's interest rate might not be as attractive as it was, and that would also affect the issuer's desire. But then many factors, well, I would not call it cyclical, but then they would change with the economy. So I don't think there would be problems. So with regard to the prospect, I'm very optimistic. Jeffrey Lam. Thank you, Chairman. Well, during the past 2 weeks or so, we all have noticed that Hong Kong's stock market has risen very substantially, and many people are saying that we have actually entered the greed of men's era. But then at night, from time to time, when I had time, I would also watch the drama series, and there were also very sad scenes. Well, in some cases, one would lost all his fortune, and others would try to make use of other funds to distort or to meddle with the market. So during this greed of men's era, as we can see, the stock market has been very robust, and back in those years, many people said that, well, even for market hawkers and drivers, they would spend every dollar and cent in the stock market. It's very dangerous when everybody in the city is gambling. And the HKMA has also dealt with tens of billions of influx of funds. So if the funds leave all of a sudden, then what is going to happen? So my question for Mr. Chen is this. I'm sure you must have put in place a series of measures to deal with such situations. So can you explain to us what has happened recently? And in the event what I described happens, how are you going to deal with them? Yes, Mr. Chen? Well, as I said in my presentation, I said that this is an age whereby there would be a lot of interconnectivity, and as a result of that, there would also be a lot of interactivity. In the past, we were segregated markets, and now with the interconnected markets, there would also be a lot of interactivity. And during the first few months of the Shanghai Hong Kong Stock Connect, there wasn't much response to that, and it's just after the Easter holidays, the turnover just rose all of a sudden. So other than the fact that many funds are from the northern side or from the northern part have now come over to Hong Kong. Well, but then with this atmosphere in the stock market, it's only normal that there would be volatility and fluctuation. We talk about a bull market and a bear market. So towards the end of a bull market, many people would try to speculate. So as Mr. Jeffrey Lam just described, well, everybody in the city would be trading in stocks. And when there is this overwhelming optimistic sentiment, but then when there is a change which is not expected, then it would deal a blow to the market, and as a result, the bear market would come. But of course, when there is any adjustment in the stock market, well, people will sell their stocks, and then they would get a Hong Kong dollar. They might be holding euro or US dollar, and then they would just transfer it out of Hong Kong. But then as far as we are concerned, we have to look at our financial design. It's a very sound system. In other words, we have already saved a large amount of money, so over 110 billion US dollars. So we have placed it, we have set it aside, and we are holding the highest quality short-term US bonds, and we are prepared for anybody who would like to come and exchange that with us. And of course, one of the factors which would result in the money going away, that's an increase in US interest rate. So they cannot do it overnight, and they will have to do it gradually, step by step. So that would be a steady process. But then they would try to do it in an orderly manner. But then what Mr. Lam was suggesting was that well, the market would suddenly turn from a bull market into a bear market, and then investors would be selling off their shares. And that might be a more rapid process, but then it's very difficult for us to foretell as to when the bull market will become a bear market, and when such funds would be going out. Next, Mr. Sin Chung Kai, Chairman. In fact, I would also like to ask this. Well, just now you've already answered part of the question. Well, in your forecast of rate hike by the U.S. Federal Reserve, you said that by the time when there is a rate hike, there would be some impacts, and there might be also an outflow of funds. But then the biggest flow that would be brought about by a hike in rate, what would it be, on funds or on the property market? And with interest rate hike in Hong Kong dollar, then when compared to other currencies, will Hong Kong still be attractive? Because in Europe, the interest rate with QE is actually coming down. So will that also dilute the impact?
What? Mr. Chen, thank you, Mr. Sin, for your question. In our current environment, the timetable of the rise in U.S. interest rate is uncertain. What makes the macro environment more complicated is that when the U.S. increases interest rate, and Japan will still strengthen the QQE, and for the Eurozone, the second largest economy in the world, will also start QE, going against the U.S. in their move. So if the U.S. gets more capital, then there will be more going into the Eurozone as well. So the U.S. dollar will have a greater impact than Euro QE. We don't know yet when the Eurozone will increase or boost its QE, and by what extent. So there are many factors impacting on Hong Kong's changes in asset market. Now, if the stock market continues to be so heated, will the bull market in Hong Kong now turn to a bear market? And the changes in the stock market may not be directly related to the U.S. interest rate rise. But then if the U.S. interest rate is going to rise, that will have an impact on the property market all the world over. Now, property prices are high the world over. People are still still willing to invest because the interest rate is so low now. With regard to the policies, the stock market can go higher and higher continuously. So people are willing to take risk. Now, if U.S. interest rates is going up, what does it mean? It means that the situation will be reversed. People may make preparations in anticipation of changes in the asset market, and not because there is a rise in the interest rate. Let me follow up. In accordance with your slide 4, if it happens in a way that the Fed's forecasts that is 3.5% in 2017, will that have a negative impact on the property market? Will there be a major adjustment in Hong Kong's property market? What's your forecast? This is difficult to come up with a quantitative forecast. This is the Fed's forecast, and the market is having another set of figures with regards to expectations. The pace of the interest will have an impact on the outflow of capital from Hong Kong. But if there are changes in property market, it may not be related to the HIBOR in Hong Kong. But for mortgage interest rate, some 3 years ago, we had 1%. And up to now, we have 2.5%, even though during this period, U.S. has not increased in its interest rate. You see that the mortgage interest rate in Hong Kong, any changes have to do with Hong Kong's own internal factors as well. So it's very difficult to say that the Hong Kong's mortgage rates will follow strictly the U.S.'s interest rate. It's my turn to ask a question. Several times you've mentioned that if there is a rise in interest, U.S. interest rate, then there will be a flow of capital. But we're pegged to the U.S. dollar. So how come that we have this outflow happening? Also, the income from foreign exchange in slide 31, for the whole of last year, we've suffered a loss of $52.7 million, and for the first quarter of this year, $33.2. Now, judging from the current trend, I think we are going to suffer more losses this year. So what will you do to curb that trend? Now, inflow and outflow of capital. The mortgage interest rate may not follow directly the HIBOR level. Well, in the short term, it is just 0%. But for the mortgage rates, we have seen a rise from 1% to 2.35%. So there are some other factors affecting the mortgage interest rate. Now, if U.S. is going to increase the interest rate among the banks in Hong Kong, there are tens of billions of dollars still in reserve. So the interest rate will not rise until the day when there is interest arbitrage and the funds will go to U.S. dollars. People would rather hold U.S. dollars. When that happens, when these funds become flowing into the U.S. dollar, then the amount held among banks will get smaller in terms of the funds held. So then that would have an impact on the mortgage rate. Now, for the mortgage interest rate, it may not follow strictly the HIBOR. Because of local demand and supply, there may be changes earlier than the changes in the HIBOR. Now, with regard to the yield from foreign exchange because U.S. dollar has appreciated so much late last year and early this year. And why? Because the U.S. said that it is considering increasing interest rate. But the market forecast is that the U.S. will increase interest rate this year. So there is a chance that the strong U.S. dollars have reflected the QE in Europe and also the possible rise in interest rates in U.S. dollars. So the market's anticipation is that the U.S. dollars will not fluctuate too much in value later this year. So that's why I said that there are a lot of variables in the forex market. We want to adopt a diversified investment portfolio, and a small part of our investment is in non-U.S. dollar currency. It's impossible for us not to hold any U.S. dollars in our exchange. So overall, we want to strike a balance. And well, there is room for us to do minor adjustments, but then it's impossible for us to not hold any non-U.S. dollars in our portfolio. In the medium and long term, we must do that, or else we will be trying to be speculating in the short term on the different currencies. Mr. Chen, there have been sayings that the property market is exuberant, and that's because the U.S. interest rate is persistently low. So that's why we haven't been able to adjust our mortgage interest rate. And that is why we have an overheated property market. But then, Mr. Chen, you said that the mortgage rate in Hong Kong is not at the same level as HIBOR, and it's impacted upon by a number of other factors. So can you talk more about the relationship? If banks would like to raise the mortgage rate, they don't have to really have regard to the interest rate of the U.S. Is that the case, Mr. Chan? Banks have their own ways of managing their capital. They will look after the source and the cost of the capital acquisition, and also the credit risk and other factors. As I said, mortgage rate in Hong Kong has risen from 1% to 2.5% now. If U.S. interest rate is not going to rise in the near future, and there is a substantial amount of capital in Hong Kong, then it's difficult to have the interest rate rising further because the interest or the capital cost is rather low now. Now, if a bank wishes to increase the mortgage rate, then they have to consider whether if they will be competitive by doing so, because your competitiveness will be eroded if you do that. So there are also market forces in play. We're operating through supply and demand to determine the interest rate level. But as I said, the tens of thousands of funds, billion-dollar funds among the banks, then the HIBOR will be come more or less on a level with the U.S. interest rate, and inevitably the mortgage rate will also rise. And in your paper submitted to the LegCo, which contains many pages, 780/1415-02, you said that on the 27th of February 2015, the HKMA has rolled out the 7th disciplinary round of disciplinary measures, and in March there are another set of guidelines issued. Many banks have told me that well, they cannot lend money even if they have capital on hand. Now, after these measures are implemented, are you talking to the banks so that they can manage their risk and at the same time they can have still do business? If there are measures which are impractical and but then affect the banks too drastically, then would you be talking to them? Well, we are having a regular dialogue with banks. But every time when we launch anti-cyclical supervisory measures, inevitably, some people who would like to buy homes cannot do so because of the further limits placed on the loan situation. We measure the liquidity to value ratio here. Now, there is another way of calculating how much money a homeowner can borrow. Okay, for the measures launched on the 27th of February, we're targeting the properties which have a lower value, and we are making adjustment on the liquidity to value ratio. Now, if there are secondary mortgage of properties, we are also putting further restrictions on those. We are communicating regularly with banks. And normally, after certain measures have taken effect in 2 to 3 months, we will have a briefing together with the sector and to listen to their views to see what improvement measures can be taken. Now, on the 2nd of March, we have also issued another set of prudential measures. And after the measures are launched, they have also made certain recommendations in relation to specific scenarios. We have actually published FAQs. And in the near future, we would also hold a briefing on whether there is any room for improvement with regard to implementation of these measures. Any further questions? If not, then we will wrap up the discussion of this item. Thank you very much. The next item is the briefing on the work of the annual briefing on the work of the Financial Reporting Council, FRC. They have submitted a paper and they will be taking us through a briefing.
I
welcome to the representatives from the administration as well as the FRC. When you're ready, I'll defer to Mr. Dickens, who will do a PowerPoint presentation to us. So please finish within 10 minutes as far as possible. So start with as soon as you're ready. Yes, Mr. Dickens. You may start now.
Let me talk a little bit about the corporate governance of the Financial Reporting Council. The Council itself consists of 11 members, of whom a majority are non-accountants. So at the moment we have 6 so-called laypersons. The Council set up 5 committees to help it in its work, and each of them has a majority of council members. One of the committees has some outsiders. That's the Operations Oversight Committee. Right, thank you. The bottom line shows the statutory bodies for conducting investigations and inquiries. The Council can conduct an investigation itself, and it can conduct an inquiry into accounting non-compliance itself. But normally it refers them to the Audit Investigation Board, which is a statutory body chaired by the Chief Executive and at the moment consisting of staff members of the Financial Reporting Council. If it's an accounting non-compliance, the Council can convene a Financial Reporting Review Committee whose members are drawn from the Financial Reporting Review Panel. There's about 40 members of the Financial Reporting Review Panel. At the top of the diagram, you can see a check and balance, which is the Process Review Panel, which is a panel independent of the Council, appointed by the Chief Executive of the SAR, and it reviews matters handled by the FRC to see whether they've been dealt with consistently and in accordance with established procedures. On the other side of the Council is the Honorary Advisory Panel. The Honorary Advisory Panel consists of people who have agreed to assist the Council in its work on a pro bono basis, which is why it's called honorary. So normally when we're conducting an audit investigation into an auditing irregularity, we will consult on a pro bono basis a member of the Honorary Advisory Panel who has expertise in complex accounting issues. The major achievements in 2014 were that we paid a visit to the Ministry of Finance and the China Securities Regulatory Commission to discuss matters of mutual interest. We briefed them on the audit reform proposals in Hong Kong, but we also took the opportunity to engage them in discussion on possible memoranda of understanding with a view to giving us better access to working papers in the mainland. The response from both parties was positive, and constructive negotiations are taking place at the moment. We also participated in local and global conferences. We attended a conference in Washington of independent audit regulators convened by the Public Company Accounting Oversight Board of the United States, and we attended the regional outreach meeting of IFIA in Southeast Asia. We are not eligible to be a member of IFIA because we do not have an independent body that inspects auditors, but nevertheless the Asian region independent audit regulators were happy to share their expertise with us and to learn from us what our difficulties were. The other major matter that happened last year was that we commented on the government's consultation paper on proposals to reform the audit regulatory system. We held a press conference to publicise our submission, and that was well received and well presented. Happy to talk about that later. Next one. Looking forward, we will continue to discharge our functions efficiently and professionally. We will maintain multifaceted collaboration with other regulatory bodies in Hong Kong, and we will continue to pursue and hopefully bring into fruition cross-border cooperation with the mainland to enhance the performance of our investigative function. We will continue to maintain public transparency and engagement, and we are revamping our website this year. Given Hong Kong's status as a major international financial centre, it is vital that it has an audited regulatory regime that is considered to be independent and fully safeguards the interests of the investing public. We will continue to support the audit of regulatory reform in Hong Kong. I now hand over to my colleague, the Deputy Chief Executive Officer, Wincy Lam.
Yes. Moving on, I'll be telling you more about our operation in 2014. What happened? Well, during the past year, the FRC continues to work closely with other regulators, including through the holding of conferences. We also refer cases to one another. We would also jointly review some cases. We would also share experience on issues of common concern or interest. Every year, together with the Hong Kong X and also the HKI CPA, we would always organize an annual forum, and this year we also held that, and together with some listed companies and also auditors, we share with them our experience about auditing some accounts. In order to enhance transparency, we would also enhance the policy on public access to information, and regularly on our webpage we will also disclose such figures of public inquiries or requests for access to information. And as the Chief Executive just said, the FRC every year would have to subject to the Operations Review Committee's review. And the Operations Oversight Committee has already completed its annual report for 2014. And in the annual report, it also summarized how the FRC dealt with the cases, that we managed to follow all the internal guidelines and procedures in reviewing the cases. With regard to our revenue for 2014, we have $20 million, and in terms of expenditure, $21.6 million, mostly for staff remuneration, and in 2014, with a loss of $1.6 million. And for work sources, there are four main areas. First, public complaints or referrals from other regulators. Second, media reports on listed companies or its auditors. Third, for modified auditors' reports, we had a review program. And finally, we had this risk-based financial statements review program. Here we have the key operation statistics for the past 5 years. In 2014, we received 33 pursuable complaints, and we also reviewed 171 modified auditors' reports, and we sample checked financial statements selected, and we also completed 4 investigations and 1 inquiries. And now I'll defer to Mr. Chen, who will give you more details. Mr. T.S. Chen, Senior Director for Investigations and Compliance. Yes, I'll share with you some investigation results. Well, since January 2015 to 31st of March, we received a total of 39 pursuable complaints, and during the same period, concerning 17 pursuable complaints, we started investigation or inquiries. With regard to such pursuable complaints, the sources were mainly from other regulators' referrals. And so the situation is more or less the same as last year. With regard to pursuable complaints, and for accountancy firms, according to statistics, they are mainly medium-sized accountancy firms, so that would account for the majority of those cases. Another source of complaints would be modified auditors' reports being screened. In 2014, up until the first quarter of 2015, well, the FRC screened a total of 200 modified auditors' reports. Concerning these auditors' reports, there are different types and also the related matters. You can look at the 2 following charts. We have analyzed the situation here for you. In fact, the situation is more or less the same as that in 2014. And the third source of work is sampled random checking of financial statements, and since 2012 we've been doing this, so we have this program in place. And as mentioned just now, well, in 2013-14, during the screening cycle, we selected 87 financial statements for screening. And the purpose of doing that is a risk-based approach. So the FLC has also undertaken this on a timely manner. We review various risks and their appropriateness, and in the course of screening these financial statements, we do not just identify whether there are cases that have to be pursued, and in the course of such checking, if we find out that there are areas that can be improved, then we would also write to the listed companies to make our recommendations. And as I said, every year we would talk to the HKICPA and also the Hong Kong X. We would hold accounting or auditing or financial reporting forum so as to deal with some areas that we have identified in the course of our screening. Finally, on investigations and inquiries, in 2014 January to end of March 2015, we started a total of 24 investigations, 2 inquiries. During the same period, we also completed 6 investigations and 1 inquiries. But for all the completed investigations, the investigation reports have also been forwarded to the HKICPA for follow-up action, and then it's for the HKICPA to decide if follow-up actions are required. With regard to inquiries, the listed companies have also made appropriate adjustments and rectification to its report and statements. So in the course of investigation or inquiries, they are not all the same, but then all in all, the FRC has noticed that for non-compliance matters, they are mainly relating to the more common problems. First, business combinations, impairment of assets, financial instruments, and also risk disclosure relating to that, and also deferred taxes, confirmation and disclosure deficiencies. As regards audit or reporting irregularities, they are mainly relating to professional skepticism, so they should always maintain their professional skepticism, and they have also not put in place sufficient and appropriate audit evidence. And they've also not engaged sufficient quality control, and there is also a problem with audit documentation. And we have also maintained and updated our website on a regular basis to make sure that the visitors would be able to have the most updated figures in order to enhance our transparency. So that's all for our report. Thank you. All right, the floor is now open to members. First, Wong Kwok Hing, and then Kenneth Leung, and then Albert Ho. 4 minutes each, including both questions and answers. Mr. Wong Kwok Hing first. Thank you, Chairman. I'd like to go back to slide 9 of the PowerPoint on main operating figures or key operations statistics. There are 2 questions. First, pursuable complaints received. From 2010, you had 9. And then by 2014, you had 33. And apparently, it's been increasing steadily other than 2011. And the rate of increase has been very substantial. What are the reasons? What is the nature of those complaints? So can you explain that? Also, in the same table, for investigations completed and inquiries completed, they are all in single digit.
So the number of investigations completed are far less than the number of pursuable complaints. So 2 questions there. Mr. Dickens, do you want to take that question, or you rather your colleagues take the questions? Thank you, Chairman, and thank you, Member, for your question. Your first question is about the number of complaints increasing year after year. FRC was established in 2007, and up to now we've been operating for 7 or 8 years. Earlier on, people might not be very familiar with the operations and duties of FRC. We are looking into auditing, reporting irregularities, and non-compliance with accountancy requirements. So as time goes by, people get to know more about our duties. So one of the reasons why the number of complaints has increased is because of that, because the regulators are more familiar with the operations of the FRC and also the public's understanding of our work. with regard to statistics, the regulators are referring more cases among each other because we are more familiar with the respective duties of the various regulators. So that's one reason. The second reason, well, if we look at 2007, or rather from 2010 to 2014, year after year, the number of economic transactions in Hong Kong has also soared substantially. So within the industry, I hope that we agree that the accounting standards have been strengthened. So that's why the number of cases has risen. With regard to your second question, on the number of investigations completed, well, these are statistics which tell the facts. But members, please note, the cases differ in their complexity. Let me cite a simple example. For a certain case, it may involve only one transaction, whether the accounting requirements are complied with and the accountant or the auditor has done what he has to do. But for another case, well, it may relate to several transactions spanning over several years. So the case's complexity differs. That's number one. Number two, we'll also have to look at the items involved in the complaint cases. Maybe the number of items complained against is one, but then after investigations, there may be more items found to be problematic. So because the number of investigations completed is so small, it means that you have an accumulated number of cases being processed on hand. Is that right? Mr. Chen.
Shows that we've got 28 investigations outstanding at the moment. Now, we've gone through those those investigations pretty carefully and discussed them with the staff involved. We believe that we will have most of those completed within 12 months of today. So yes, there is a backlog, mainly arising from the fact that there were 22 investigations initiated last year, but we think we can cope with it within our existing resources.
好啊，跟住係梁繼昌議員。
唔該主席，我想睇翻
Mr. Kenneth Lam, slide 18. For every case completed, has the FRC put a summary of the cases on its website so that it can serve as a reference for the auditors? For every case completed, do you have information put on your website to serve as a reference? Who to take that question?
Completed is referred to the Hong Kong Institute for Certified Practicing Accountants, who make the decision whether or not to initiate discipline. But at the time we refer the case, we issue a press release outlining on a no-names basis what the issues were and what our findings were. So the profession can go there and find out the sort of things that are being investigated by the FRC. When the case is completed by the HKI CPA, we then publish the executive summary of the case, but on a named basis.
OK， 我想轉頭而家問一問翻
Thank you. I have a question for Mr. Ho about the consultation on the independent auditor regulatory reform. You have completed your consultation in September. Your timetable is that in July this year you would announce the results of the consultation and explain to us your way forward, how you would take forward the legislation. Has that timetable changed, Mr. Ho? Chairman, we plan to come back before the summer recess on that work. The sector has reflected to me that there are still 1 to 2 points of divergence in views which have not been resolved between the government and the sector. Would you try to narrow down the difference, or will you do another round of consultation? What is your plan? Mr. Ho, Thank you, Chairman. And next time when we come back to this panel, we will tell you the outcome of our consultation. And in that report, we would let you know the views expressed in the submissions and share with you our way forward. Now, we've been doing some analysis of the views in the past several months, and we see that we need to give more thoughts to certain areas. And we actually have started to communicate with the major stakeholders, including the HKICPA, on specific issues of their concern. So in the outcome of our consultation, we will try to explain our rationale for making certain proposals. And if there is divergence of views, we'll try to narrow down the differences in views. And if we have different views on certain items, what will be the way forward? We will try to talk more, or we'll try to do more consultation, or what. So this is something that we will do. So is it the case that you will not legislate immediately after you've announced the consultation results in July? You will still go ahead and have a dialogue with them before legislation, right? Well, our wishful thinking is that everything is in place when we release the consultation results, but then there are bound to differences in view on certain issues. So in that case, when we draft the legislation, there is still room for us to hammer out the details on issues with divergent views. Mr. Albert Ho, FRC. The auditing sector is facing a new problem. Recently, there is a listed company, which is a mainland company, listed in Hong Kong. They refused to present some contracts claimed to be involving some state secret. The name of the company is China Precision. The Hong Kong auditors can't really take a look at the important contracts, and ultimately the financial statements have to be taken back to the mainland authorities, and the contracts have to be certified by the mainland auditors, and the contracts cannot be seen by Hong Kong editors. Well, there are different approaches to auditing adopted in the mainland and Hong Kong. So they claim that the contracts involves state secret, and they refuse to present the contracts to them. And as long as the contracts are certified by the state authorities that they are correct, then, this is the way that is being done. So the Chinese standards are being adopted in this case. Will that have an impact on the auditing standards here in Hong Kong? Mr. Dickens?
I need to be careful how much I comment on this case, because we don't normally comment on an individual case. And I do have a conflict of interest, because I was involved in the case in the stock exchange when I was head of listing. But I can say this, that the company concerned is not under Chinese accounting standards. It is under Hong Kong financial reporting standards, and it's been audited in accordance with Hong Kong standards on auditing. The difficulty you refer to does happen in other jurisdictions, particularly in relation to companies engaged in the defence industry. And different jurisdictions have developed different practices for the auditor to get sufficient amount of reassurance. There's a question in this case whether there is sufficient amount of assurance for the auditor to proceed, and I'd rather not comment further.
But can you give an general form? Namely, if we encounter a situation, similar situation, where certain primary documents are not available for auditing.
Yeah, okay, there's two sorts of state secret,
yeah.
Okay? At the moment, there is a perception in the auditing industry that most commercial documents in China are state secrets. That is not correct, but there is difficulty in getting access to the audit working papers by the SFC and occasionally by us. That problem we are working on with the Ministry of Finance and the CSRC, and we believe that we will have a memorandum of understanding with each of them by the end of this year, which will give us access to so-called state secret working papers. Then there's a higher level of state secret which is genuinely concerned with, say, the defence industry. The normal course that's taken there in some jurisdictions is to make the auditor sign the Official Secrets Act, or to put him in touch with the ministry that can confirm the general tenor of the documents without giving him access to the documents themselves. And that is a way forward that is being explored in Hong Kong.
So in short, your answer is that you are now working together with the relevant bodies on a standard or practice to be adopted.
We and the SFC and the Exchange are working to that end, yes.
I see.
But it depends on cooperation by the mainland.
So we'll be expecting something to come out in due course?
In due course, but I'm not promising speed.
好，梁星議員。
就住文件呢，我想問問呢個第7段嗰個關於一個叫採用嗰個即係呢個講到並於適當時就採取跟進行動，就針對嗰啲非無保留意見嘅核數報告。咁呢個我就想睇睇一般揸咩準則，因為好多呢啲咁類似嘅會出現嘅非保留意見嘅核數報告。咁如果你話適當時係咩叫適當，同埋根據咩原則先採取。
Well, you said that when appropriate, you would do follow-up actions with regard to modified auditors' reports. What criteria do you adopt in selecting the modified auditors' reports? Paragraph 10, you mentioned about appointing external reviewers to enhance efficiency. You said that you would commission or hire external reviewers to enhance efficiency, to review financial statements and accountants' reports of newly listed companies. Is it the case, well, that you would be spending so much or you have to deploy a lot of resources in vetting accountants' reports of newly listed companies, and that is why you want to employ or hire some external reviewers to do work for you? And is it value for money? Now, for external reviewers, are they accounting firms? Now, if accounting firms are being hired and they are asked to review the reports done by other accounting firms, will there be any measures to sort of prevent conflict of interest? Mr. Dickens.
The external reviewers are not paid, so there is no outlay of money on the external reviewers. They act on a purely pro bono basis. There are 11 of these external reviewers. 4 of them come from Big Four firms. 4 of them come from medium-sized firms, and 3 are academics. When we send the financial statements out for external review, we always involve 2 reviewers so that there's a check and balance on the work. The auditors are subject to declaration of conflict of interest under our statute, and they cannot act on any matter in which they have a conflict of interest. Furthermore, they are bound by the secrecy provisions of the Financial Reporting Council Ordinance, so that the work is totally confidential. It's between them and us. When we get the reviews, external reviews back, we compare the 2 external reviewers' comments, and we then review each of the comments ourselves to make sure that it's consistent and correct and in accordance with our policy for following matters up.
主席，我聽咗當然呢個平衡。
All right, of course, you will have to strike a balance, and it's not an easy task. But then, after all, what we have been talking about is that we have to do things to make sure that it's good value for money. So we have to have proper checking so that when we commission an external reviewer to do the job, we have to make sure that there would be good effect so that if you look at it from the value for money perspective, we'll be able to achieve good efficiency and good result. In other words, in terms of the reasonable manpower for the job, that's a more important consideration. Is that right, Mr. Dickens?
The external reviewers act on a pro bono basis. They are not in fact remunerated by us.
Mr. Ng Lang Sing, any further follow-up? Yes, I understand. In the end, that might not have incurred any expenses, but then the whole process would be prolonged because you will have to allow time for the external reviewers to review the situation. So I think in the long run, well, other people will have to do it on your behalf. So in terms of time control, would that prolong the whole thing, and the result might affect the parties concerned. So I hope that you can do it more carefully so that you will be able to do it more efficiently. Sometimes the timing might not be controlled by you. So that's my comment. Yes, I'm sure Mr. Dickens has heard it. Mr. Dickens, do you like to respond?
To improve the efficiency of the process.
OK，好啊，各位議員就。
All right, any further questions? If not, then we'll wrap up our discussion on this item. And thank you very much for coming.
咩聲咁嘈啊？哦，太開心啦！好，而家我哋歡迎咧政府當局代。
All right, I welcome to the government's representatives. First, over to Ms. Selina Yan. Can you walk us through the paper? So please finish it within 10 minutes. So you can get started as soon as you're ready. Testing, 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 testing. Testing, testing, English channel, testing, testing. Am I coming through? Testing, testing.
呢個你同事嚟噶嘛，係嘛？即係立法會同事嚟㗎，呢個應該係整緊嗰嘢嗰個，唔係㗎。哦，IT 嗰啲
主席啊，
係好，請開始啊。
Yes, please start. Yes, Chairman, members, we are here to brief you on the proposed enhancements to the deposit protection scheme. Well, by way of background, Hong Kong's DPS came into place in 2006. It was fully implemented in that year with regard to the compensation limit under the scheme. Well, for individual depositor at every bank, up to $500,000 would be subject to full protection. Under the arrangement, at present, some 90% of the depositors are able to get full protection under the scheme. The scheme covers all banks, i.e. AIs, that is licensed banks, except for a small number of those which are exempted. And that would also cover deposits denominated in Hong Kong dollar and other currencies. And under the DPS fund, for the purpose of ensuring that when it has to be used under the DPS, we have now saved up to $2.4 billion for that purpose. But then what's fortunate is that since the implementation of the DPS fund has never been triggered. And what we are proposing today covers three aspects to align with international trend. And last year we also conducted one round of public consultation. So here we are proposing three legislative amendments. First, we'd like to amend the DPS ordinance so that with regard to the approach, we're going to adopt the gross payout approach to determine compensation. In other words, in determining the amount of compensation, there is no need for us to look at the depositor's deposit and also offset it with his liabilities. And under the circumstances, we are proposing to keep it at $500,000 as the cap. And the purpose is to ensure that the new arrangement can expedite the payment of compensation to the depositor, so that instead of 6 weeks that are estimated now, we expect it to be shortened to 7 days. But then the committee or the board would still reimburse from the bank's assets for the amount of compensation paid out. At the same time, under our proposal, under the current insolvency regime, the existing creditor hierarchy will remain unchanged. So if the depositor owes debt, then the depositors will still have to repay the outstanding liabilities to the banks. And for the level of premium rates applicable to banks, that would remain unchanged. So the HKDPB will calculate the contributions payable by banks on a gross basis. And the second proposal is to enhance the certainty for determination of the quantification date, or the QD. At present, a reference date for compensation determination, including interest and conversion of non-Hong Kong currencies, usually under the current arrangement, well, at the time of appointing the provisional liquidator, that data would be used as the reference date. And now we will change it so that it would be the data on which the DPS would be triggered, i.e., at the court of first instance, a winding up order has been issued in respect of the bank, or the monetary authority has already served a notice to the DPB to trigger the DPS. So that's the data to be adopted. So that would provide for greater clarity for the triggering mechanism of the DPS. Last but not least, we would also like to enable the HKDPB to issue electronic notices. At present, upon the triggering of the DPS, the HKDPB will notify depositors of compensation entitlements by post as per the present arrangement. we propose that other than giving written notice, the DPB should also be able to send out electronic notices that's in line with the current IT development, so that it can make use of electronic means to notify the depositors. That would enable it to do it more expeditiously. But then under the new proposal, if depositors do not use electronic communication, they would not be affected at all, because the DPB will continue to issue paper form notices to them. In conjunction with the HKMA, in the fourth quarter of last year, we conducted a public consultation on the proposals, and the responses that we have received indicate support to the proposals. We are now drafting the amendment bill. We hope that later this year we will be able to table it before this council. So that's all for my presentation. Thank you. The floor is now open to members. Mr. Albert Ho first. 4 minutes, including both questions and answers. Well, for the $500,000 cap, well, that's the initial limit that was set when introducing the legislation. Yes. And some time has elapsed and no adjustment has been made whatsoever. Why? And the second, well, I do not necessarily disagree with this, but then I do not quite understand why, with regard to the compensation to be calculated, there is no need to offset it against liabilities, because in the past you used to do it. So why are you proposing to delink the two? Well, thank you, Chairman. First, on the $500,000 cap, in fact, in 2011, there was an adjustment. Before the adjustment, there was also a round of consultation, and initially, it would only cover 100,000 Hong Kong dollars. As you might recall, that's why we believe that, well, we just finished the review, and it's still quite a short time from the last review, and we believe that the limit is appropriate. And the second part, well, precisely one of our proposals is that, well, at present there is an offsetting arrangement between the deposit and the liabilities of the depositor. You can imagine, in the event that, well, the bank might run into problems, and if the depositor's deposit has to get a compensation from the DPS, so that for the time being, when they are not able to dispose of their deposit, they will be able to use the compensation. But then if it's to be offset against their liabilities, it will take time to do the calculation, and the DPB will also have to check the records with all the relevant banks, and that would defer the payment of the compensation to the depositor under the DPS. And now we haven't yet triggered the DPS and used the funds, but then according to the DPB's estimates, well, for the first payment, that might take about 2 weeks for them to make the first payment, but then to make the full payment, it might take up to 6 weeks. So in reality, it might not be very desirable. And if the depositor really needs to use the money urgently, then that time duration might be a bit too long.
So that's why we are now proposing a gross payout approach. And that is, when we calculate the payoff amount, we don't have to do the setting off, and that is much, much faster and convenient. According to the DPP's estimates, if we go by that approach, the payout can be done within 7 working days to the depositors. Let me supplement. This doesn't mean that the DPP doesn't have to have regard or consideration to the liabilities. Ultimately, the liabilities have to be sort of recovered from the depositors, especially when the banks go into insolvency. The depositors' liabilities have to be, taken into account, and the depositors have to pay the outstanding liabilities. Well, Chairman, the difference may be this. Let me cite an example. If a person has $500,000 in a bank in deposit and then at a liability or overdraft of $400,000, if you pay him $500,000 quickly and the bank goes into insolvency, that means the banks cannot recover the $400,000 from the deposit. Well, in the past, it seems that there would be a setting off, right? Perhaps Ms. Mina Dawana can respond on this point.
Your question. As I understand it, the question is that, if we pay compensation of $500,000 without any regard to the liabilities, it means that the depositor is getting an advantage. But as Ms. Yan explained, actually this debt is still owed by the depositor to the bank, and this will be claimed by the liquidator in liquidation. The only thing that is going to happen is that, we pay compensation first, and, we can subrogate to the rights of the depositors and claim for that amount. But the debt is not extinguished. We have done I think we have to understand that the purpose of the deposit protection scheme is to promote banking stability. If depositors, fear that they don't have access to their full deposit amounts, they're going to run the bank, and this could lead to instability, contagion. Hong Kong being such a small place, and there'll be rumor-driven runs. So, but the fact of the matter is that there are not many depositors who do have liabilities with the same bank. So the concern, we have worked out the figures, and it's really minimum. And also, we're going to claim back this amount. So,
okay, suppose the deposit is undercharged to the bank to secure a loan. Would that make a difference?
The deposit is undercharged. No, it's not going to make a difference.
No difference?
No. And we've consulted, insolvency practitioners and everybody, and they see that the benefits outweigh the costs because, the creditor hierarchy is maintained and the debt is not extinguished. It's just that, for financial stability and banking stability, the depositors will get hold of their funds right away to help any cash flow problems.
好或者再第二輪啊嘛，如果需要再問吳亮星元。
Round, Mr. Nang Sing. Thank you, Chairman. In relation to paragraphs 18 and 19, you said you have consulted the banks and they have given you some feedback. I believe that banks have no problem with this gross payout approach. We also agree that we can enhance efficiency and also streamline the process of payout. I think it can convenience the depositors. So the banks welcome such a change. Now, if there are liquidation cases, then the impact can be minimized by going for this approach. So we accept this proposed change. I would like to talk about e-communication. Electronic notices, technology has to be involved. As you said, in paragraph 19, can you enhance the safety and effectiveness of electronic communications? If a great number of depositors involved and the deposit amount involved is substantial, I suggest you make sure that you can ensure the reliability, safety, and effectiveness. Can you undertake that the system is safe and effective? And also, the protection limit has been raised previously from $100,000 to $500,000, and Ms. Yan has explained this earlier move. What we are concerned is that, mainland authorities are also introducing this deposit protection scheme. Then mainland is also introducing a similar scheme, and that's a good initiative on the part of the mainland authorities. As to what the protection limit should be, this is something that we should study. Now, we've increased 5 times from $100,000 to $500,000. So next time, what will be the mechanism that we would use to consider whether the amount should be further raised? What criteria should we adopt to consider an increase? Would it be increased 5 times again? So what kind of mechanism we would put in place to consider whether we should have an increase in the protection limit? Ms. Yan, please. With regard to the protection limit, first, I would say something. Then I would defer to Ms. Dewana to talk about the security on e-communications. Now, protection limit. Now, the level is $500,000 starting from 2011. When we look at the protection limit, we consider a number of factors. First, the coverage ratio, is it enough? At present, we see that if we go by that protection limit, 90% of the depositors in Hong Kong will be covered. So this is quite a good coverage rate, we consider. Ms. Dewana also mentioned about the security of or stability of the banking system. In considering whether we should adjust the protection limit, there are other factors to be considered. Whether we have improved our supervisory measures, and also we are proposing this resolution regime. In the event that financial organizations have difficulties, what kind of resolution regime should be put in place to help them tide over their difficulties? So this is another factor that we take heed of. Also, developments in other jurisdictions will be another factor taken on board in considering the protection limit. So these are the factors that are considered. So right now, we don't see that there is a need to consider the rise. Well, there is another question. Well, perhaps you wait for the next round because your time is up. Mr. Wong Kwok Hing. Thank you, Chairman. I have 2 questions. The quantification date, QD. How can you ensure that with the change in the QD, the depositor's interest will not be harmed? Second, for fixed-term deposits, now, some banks, in order to attract new customers, may persuade them to take out life insurance products. While they tell them that they are saving plans in nature and they offer a higher interest rate than the fixed-term deposits. For these kind of life insurance products, will they be covered under the DPS? Ms. Yan, thank you, member, for your question. Perhaps I'll answer the second question, and then Ms. Dewana can talk about the QD. The DPS, as the name suggests, protects deposits. So this is a deposit protection scheme. The member referred to life insurance products. They may not be deposit products. They may be investment products linked to, they are life insurance products linked to investment. So they would not be covered under the DPS. Now, as to the quantification date versus protection of deposits interest, can Ms. Dewana take that question, please?
About the quantification date, just want to clarify, because when we pay out, the payout amount is an aggregation of all the deposits plus a calculation of any outstanding interest. And then also, if it's foreign currency deposits, it's the exchange rate. And so we need to have a quantification date to quantify, because the interest rates can vary and the exchange rates can vary. So to provide certainty, we have this need for a quantification date. There is one existing one already, but its definition is very, it's subjective in the sense that it depends on when the board has the opinion that a liquidator might not be appointed, or there's uncertainty as to when he might be appointed, and this could lead to delay. So to eliminate all of these uncertainties and to enable prompt payout, we've now suggested that the quantification date be a specified date, which is either when the winding up order is made or when the DPS is triggered. So, so this is actually to protect the depositor as well. So, the liquidator, when eventually comes to liquidate, will do a calculation, and there might be a small difference, but the loss to the depositors would be minimized by having this certainty and getting the fastest payout possible.
係，好啊，咁跟住第二輪呢，就係吳亮星議員。
Second round, Mr. Ng Lang Sing, would you like them to answer your earlier question? I would like to ask about the security of e-communication. When we talk about electronic communication, there is a technology involved, and there may be a risk. So how secure can you be in your system? Yes.
Use the, whatever technology is available to ensure, as you suggest, the reliability, the safety, and the effectiveness of e-notices. And the e-notices, I have to point out, are a supplement to paper notices. Everybody will get a paper notice in any event. But if they have been using electronic channels to communicate with the bank, and they have a valid email address, then there's an additional supplement of using an e-notice. So, but the main thing to note is that the paper notice is always going to be there, and we will use the most up-to-date. We will use encryption, password protection, and all of those things that are available to us to ensure safety and reliability.
好，田北俊議員。
Mr. James Tan, my apology first. I arrived a little bit late. Perhaps the administration maybe have already explained what I wanted to know. With regard to 3A, paragraph 3A, the gist of the proposals is about this gross payout approach, and that is the payout will be in full, as far as the amount is concerned, and that is, you would have disregard to the liabilities of the depositors. I found that very strange. Now, that we are having a very low interest rate in banks now, and in many major currencies, we are seeing zero interest rate. So people would rather, save, put the money at home rather than at a bank. Now, now you say that you will pay out the gross payout. Now, if this depositor has taken out personal loans, say to the tune of $200,000 or $300,000, and then you are paying out the full $500,000 in gross payout first, and at the same time, well, he is still owing this $200,000 loan liability with the bank. So do you mean that you will pay out the full $500,000 to him first? Yes, your understanding is correct, Mr. Tian. As regards the Financial Stability Board, comprising some 20 members, the overall trend is towards the gross payout approach versus the net payout approach. Now, we have the the net payout approach. why is it that many more international financial centers are switching to the gross payout approach? If we have to do setting off against the liabilities, this is no simple matter. They have to check it against many reports of the banks, and there may be many procedures to go through, and which may take quite a period of time. Now, in case when a bank runs into certain problems and the DPS has to be triggered, I believe that it will be very exceptional circumstance, and people are very concerned about it, and deposits may be affected. Now, if the payout takes time, then it may pose difficulties to the depositors in terms of their own cash flow, and it would also undermine the stability of the banking system, because the payout may be effected only, say, in 6 to 8 weeks' time. So after considering these two factors, i.e. Arrangements in other places, including the mainland's system, while the mainland has just recently launched the DPS, they are also going for the gross payout approach. So that's why we have these proposals today. Of course, that would do a whole world of good to the depositor, because he is getting $500,000 in full, and he had a lot of time to return the loan of $200,000.
So I would find it strange, because as far as the banks are concerned, of course, when I compensate you, it's not a bank that will be compensating. It's from the DPS. But then, for the banks concerned, they would become even more unstable if their liabilities are not paid. Well, for the debtor, he will have to discharge his duty by repaying the loans. So that would not be changed. But then, at the same time, if the deposit exceeds the $500,000 limit, and if there is any surplus deposit, that would not be covered by the DPS, and there would also be this offsetting procedures. So I'll defer to Ms. Devana.
With Selena's, Ms. Yan's explanation that, there's no set-off only up to the protection limit, which is $500,000. So the rest, if you have a $20 million deposit and, $50 million loan, anything above the $500,000 is, still going to be set off.
That could be offset.
Yeah, they'll be offset. So in this, in terms of the implication for insolvency, the proceeds that are available for distribution, it's minimum. And the other thing you have to take into account is that not many depositors have liabilities with the same bank, and also it doesn't extinguish their debt to the bank for any liabilities, and the liquidator will go after them. And the charge-off rate traditionally has been very low in Hong Kong. Plus the fact that IMF actually came to Hong Kong in 2013, they looked at the crisis management system, and they saw that this was really an impediment to making fast payouts. The fact that we had this, set off, and jurisdictions like Singapore, like UK, all of these countries, Europe, they're all either have moved or moving in this direction, and we really need to keep up with that. Because we really don't want another, we don't want the equivalent of Northern Rock in Hong Kong, where there are, queues, because we know that the implications are really horrendous.
All right, if there are no further questions, then I'd also like to ask a question. All right, in the paper, you said that in the fourth quarter of last year, you already conducted a public consultation. So as Mr. James Tian just asked, well, for the consumers and also for the depositors of banks, of course, they'll be happy because they don't have to have their liabilities being offset. But then in your consultation, have you received any opposition? So what Mr. Ng Leong Sing said, that the banking sector took it easy. But then were there any opposition, and what were they opposed to? Yes, Ms. Yan. Well, Chairman, if I remember it correctly, there was no in-principle objection with regard to the proposed amendments that we presented today. Of course, for individual respondents, they also commented on individual proposals, and they might have made some technical comments. And also for the DPS compensation limit, they also made some suggestions. And for the banks, they also hope that in the future, for the premium, they agree with what we proposed, that that should be kept at this current level. So for the consultation conclusion, we would be publishing that shortly. And you'll be able to see that, well, from the respondents, they have given different comments. But then all in all, concerning the three main proposals, they were in general support. I'd also like to supplement on what Mr. Wong Kwok-hing said. Well, for the you said that the insurance authority already said that there would be another compensation fund for the life insurers. So insurance policy will not be covered by this scheme, but then it will be considered by the IIA. Mr. Chen Kam-lim, just now you talk about deposit and loans and whether there should be this offsetting arrangement. I think they should be separated. Because indeed, if you have money to put into the banks as deposit, and at the same time, if you take out loans, for example, a mortgage loan, and in fact, I'm actually using my property as a collateral, or else they would not be giving me this loan. And if there is any bank failure, then there should be some safeguards for my deposit. I think it's right. And when I deposit money into the bank, and when I take out loans from the bank, there is no correlation between the two. There has never been any mention about using my deposit to offset my liabilities. And if there is this offsetting arrangement, then, well, as far as I'm concerned, I would try to take out loans from Bank A, but then I would not be depositing my money into Bank A. I would try to deposit my money in Bank B in order to make sure that there cannot be any offsetting in the future. So I personally think that I agree with your proposal, because I think that's more reasonable. And also, if there is anything wrong with the banking system under the DPS, the depositor would be afforded compensation, and you might be talking about $500,000 right now. And if there is any surplus in their deposit, then it might take some time after the liquidation of the banks, after the assets have been calculated, and he would only be able to get the payout a long time later. So I think the most important thing is to give sufficient protection to the depositors, and also for the collaterals. There might be some value in these collaterals, and the banks should not think that they would incur loss if there is no offsetting. And also for the debtor, they would also have this responsibility. Other than the fact that there might be collaterals, they would also have to repay the loans. So in this regard, I think the two should be segregated. All right, Deputy Secretary, any response? I think what Mr. Chen just said, those are some of the considerations behind our proposal right now. Last year, when the IMF introduced this financial stability scheme, when they reviewed our situation precisely, they also looked at the way we did what we have been doing, and they thought that the better way is to adopt this gross payout method. And that's beneficial to the overall financial stability of the system, and I believe that our proposal strikes the right balance. Number one, we'll be able to deal with this financial crisis in a more expeditious manner, and second, for the depositor, if they have this liability or responsibility, they will still have to discharge the duty to repay the loans or liabilities. Yes, Mr. Christopher Cheung. Chairman, my question is very simple. Well, people will still use the deposit certificate as collateral to take out loans. For example, if they buy A shares, so I'll deposit Hong Kong dollar in the bank, and then I'll take out a loan of RMB to buy shares. So would that be used for offsetting? Deputy Secretary, I'll defer to Ms. Dadwani to answer. Yes, Ms. Dadwani.
An earlier question thank you very much for your question. There was an earlier question as well, and whether, if the deposit is subject to a charge, does it make a difference? And it doesn't. And this is a deliberate policy reason for this, because of all the reasons we've given, and that is, the effect will be minimal, because we're only talking about $500,000. Anything above $500,000 is subject to set off. And this is in the public interest, because it promotes banking stability, which is, and it's the international trend. And, FSAP have come, they've looked at it, they've recommended this. When we've done simulations and we've done rehearsals, we've discovered that once you get into setting off, the whole process is delayed considerably. There's no way that we could, pay out in 7 days. And, it's okay for those who buy shares. They maybe have, lots of spare cash in different banks. But for the man on the street who really needs his money, to support himself and his family, it makes a lot of difference if he gets his money within 7 days or within 6 weeks, because, the whole system is delayed, or at the earliest in 2 weeks. 1 week is half the time as compared to 2 weeks. So I think that, when we look at the bigger picture, when we look at the cost benefit, then I think this is the way to go.
Yes, Mr. Sin Chung Kai. Chairman, I support the proposals, but I still would like to ask this. Well, under your proposal, you said that there's no need to offset the deposits against the liabilities. You said that that was the international trend. So are we proposing this change because of international changes, or is it that in the past we had not done enough, that's why we have to do it now? Ms. Yen, there are two aspects. Number one, we have to consider the overall financial system's soundness, the importance of it, and also we have made reference to the overall international trend, as I said briefly. For example, under the FSB, there are some 20 members, and some 14 of them have already adopted this approach or will be adopting this approach. That is the gross payout approach or method, instead of the past method of offsetting the deposit against liabilities. And I think number one reason is that the speed of the payment would be a lot faster, so that the depositors' confidence can be maintained. And then when the bank fails, then that would not aggregate the systemic risk. That's why many economies have already got this in place. Well, in the paper, we have also given this in footnote 3. For example, in Australia, Canada, France, Singapore, and Switzerland, they have got this in place. And then in EU, well, last year, they also issued the directive, and we understand that in the mainland of China, they are going to launch the deposit protection scheme in May this year, and they would also be adopting the gross payout approach for compensation determination. Yes?
That, the trend is, like, when we last reviewed this, the trend wasn't so obvious that, that we should strive towards 7-day payouts. But this has now become very clear after the financial crisis and a review by, FSB and others, the international standard setters, including International Association of Deposit Insurers. And so this has emerged. And actually, the trend is we're always learning new things and trying to improve our system. So we also review periodically, and for instance, whether the protection coverage should be 500,000 or more. We review this almost on an annual basis. So be assured that we will keep track, and we'll keep up with international trend. And it's not because we were negligent in the past. We've been doing this periodically.
Yeah, 我仲有一個跟進問題咧。A
follow-up question. $2.4 billion in the DPS fund now. And they said that, well, the amount is so huge that they really don't need any further contribution from the parties. So some people have said that. But my question is, after abolishing the setting off approach, do you have to provide for an extra amount in case there is a bank run? Well, our estimate is that based on some estimates by banks, not many depositors have liabilities in the banks. So the change or the extra amount that has to be provided for will not be very great. So that's why it means that the banks should not be paying a relatively huge premium. We will maintain the existing premium level. They may have to pay more in a way, but then the extra amount to be paid will not be very substantially larger.
First of all, I'd like to explain that the Deposit Protection Fund is just there to pay for costs of the payout, that it will not actually be big enough to cover the payout. So for that, we have a standby credit facility from the Exchange Fund to the tune of 120 billion. So that, that is the purpose of this fund. And when we move to gross, we have not increased the premium size, but we will be continuing to collect premiums because we haven't reached our maximum yet. Our target fund size is 0.25%, and right now 2.4 billion only represents of the existing level of deposits 0.14%. So we've still got a long ways to go before we reach our target deposit size. So this is the thing, and the banks will end up paying a little bit extra because the relevant deposits for the purposes of premium collection will be calculated on a gross basis rather than a net basis. But again, the banks are willing to swallow that, given that they can save on IT costs, labor costs. Not having to do netting has a lot of material benefits for the bank, simplifies their systems and everything. So again, for the banks, after a cost-benefit analysis, they're happy with our proposal and they're very, very supportive.
Any further question? The administration plans to introduce the relevant bill to the legislature later on in this year. So I believe members don't have any problem with that arrangement. If there is no further question, then I will end the discussion of this item. AOB. Any AOB? If not, then I will declare the meeting adjourned.